So I kind of walked through the different definitions of a Ponzi scheme. The SEC has a good list of what defines a Ponzi scheme and what some of the red flags are looked for. And the reason I did that is because one of the common criticisms of Bitcoin is that it's a Ponzi scheme that it only you have to keep people have to keep buying into it in order for it to do well. Which of course has some degree of truth to it. So you can kind of break that into a narrow definition of a Ponzi scheme, like an outright fraud, versus a broader definition of it. And so from the narrow scope, one of the things I looked at was kind of the whole launch process of Bitcoin. And so what we saw, for example, was that the creator or creators, they released a white paper pretty much showing how to do it before they launched it themselves. And so rather than kind of keep all their secrets to themselves and then launch it, and then they gave themselves no pre-mine, so they didn't give themselves coins and then launch it. They had to continue to mine it just like anyone else on the network. So they had really no inherent advantage. And that kind of contrasts to a lot of the ways that later tokens launch themselves. A lot of them use pre-mines, to their founders and their initial investors, whereas Bitcoin was launched more like a protocol rather than more like an investment. By most metrics, the narrow definition doesn't really apply. And then the broader sense is just the idea that really any non-cash flow producing asset is only worth what you think someone else is going to pay you for it in the future. And that's true for Bitcoin, that's true for gold. All these kind of high-end kind of scarce goods, they're always based on their scarcity and their desirability. And one thing that they all have in common is that they have some degree of utility, but they also all have a monetary premium associated with them. And so they're bought for more than just their utility. Bitcoin's kind of a similar way because for its utility, you have permissionless international payments that pretty much can't be stopped, and easy mobility of Bitcoin still has a variety of risks. It's going through an adoption period, and we'll see how far it gets, but it doesn't really meet the definition of a Ponzi scheme more so than any other kind of non-cash flow producing monetary asset.